What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. Today, I want to give you guys a full breakdown of the situation that we currently have on gold. Now, why do I want to speak about gold? Because the market has just created exactly the move that we wanted to see from our previous analysis on it. So it's definitely time to make an update and see where we can be looking for the next potential opportunity in this market and on this commodity. Now, as usual, I will be keeping the analysis as educational as possible. So first, I will be covering the technical aspect of the market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probability opportunities on the pair and actually on this commodity. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see how this market has just provided this M pattern. Now, when you see a market create an M pattern, what you expect is for the market to create a move to the upside, to go and complete the pattern itself at the previous support turned resistance. So here in the monthly time frame, what we actually expect is for the market to complete this M pattern at the neckline, which is the previous support now turned resistance that we have at this level, which we can easily identify with this horizontal structure. So here in the monthly, the situation is quite clear. We expect the market to create a move to the upside to go and complete the pattern at this previous support turned resistance. Going down on the weekly time frame, what do we have? Now, here in the weekly, we have a market which has just provided a nice impulse to the downside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take the Fibonacci on the impulse leg. So in this case, from this high to this low. And if we take our Fibonacci from the high to the low, what we can see is that we have the market that hasn't retraced yet, not even to the 0.382 of the Fibonacci taken on the impulse. Now, keep in mind that generally speaking, when you have an impulse, you want to see the market retrace at least to the 0.382 of the Fibonacci taken on the impulse, meaning that in this case, there is definitely the possibility to see the market create a deeper correction, possibly at least to the 0.32, but possibly even to the 50%. Now, why am I saying even to the 50%? Because if you look at the structure, the previous weekly and actually also monthly previous support term resistance is exactly at this area. And the Fibonacci level that is aligning the best with this structure is actually the 50%, meaning that in this area, we actually have a confluence of resistance that the market might easily want to go and test. So here in the weekly time frame, we can definitely expect the market to provide a deeper correction before a possible continuation to the downside. Going down on the daily time frame, what do we have? Now here on the daily, we can see how the market has just provided this W formation. Now, when the market was here, I made a full breakdown explaining all the reasons for which from this area, we expected the market to provide this move to the downside to go and complete the pattern at the previous resistance, now turned support, which is the neckline of the W formation itself. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in description so you can go and check it out for further reference and more free education. Now, by definition, the neckline of a W formation is the area of previous resistance turned support. So when the market completes a W formation, after that, what we expect is for the market to reject that zone to the upside. And in fact, we can see that that is exactly what the market did here. The market went for the completion of the W formation and we capitalized on this move with students with a nice day trade to the downside, and after that we do expect the market to get rejected to the upside, which is in fact exactly what the market is currently doing. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also make sure that you smash that like button and subscribe. So how we can be approaching this commodity for an opportunity in the future? Well, at the moment, we have a market which is testing exactly the previous high. So unless you are already in longs from here, now that the market has reached the previous high, looking for a long at a resistance area is never a good idea. So if the market here will provide a correction, after the correction, there is definitely the possibility to be looking for a potential continuation to the upside. But let's first go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see is that with the last reports, hedge funds have been consistently decreasing their net positions. In fact, we went from having 157.5K net positions slowly decreasing all the way down to the 175K net positions that we currently have, with 3.7K shorts added with the last report and 10.6K longs getting closed, reaching 79.6K short positions and to only 254K longs, which is a quite low number compared to the 349K that we had here. They almost closed a 100,000 in long positions. So massive amount of longs getting closed. And obviously shorts getting opened because we went from 55K to 79K short positions. And in fact, gold has been clearly in a downtrend. We have seen massive downtrend developing lately. So is there a possibility for a deeper correction? Absolutely yes. Before then, the continuation to the downside can continue because as we have already seen on the monthly, at this area we have previous support turned resistance. However, can we easily be looking for this long? No. As usual, we have to be reactive in the market and not predictive, because we know that overall this is a highly bearish market at the moment from an institutional perspective. So if we are to be looking for a long, it's only a short-term retracement before the continuation to the downside. So we have to be very careful. And how we can do that? Now, as usual with students, the way in which we will be approaching this is being reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So if the market will provide another correction to this support for inside of this area, and from here, we will be monitoring price action on the 4-hour time frame and lower, waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point we will be adding gold to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to create the deeper correction that we want to see already on the monthly and weekly. Before then, the market can continue the continuation to the downside. But if when the market will reach this area, everything will remain bearish on the intraday timeframes, we absolutely cannot be looking for a long, because remember that we are currently in a bearish market. So very important to wait for confirmations from an intraday perspective inside of here, which is exactly what we will be doing with students. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.